Hi everyone, in this video I'm going to briefly break down all the new capital gains changes that the Canadian government is proposing to roll out. This video will just be capital gains. I'm going to release another video tomorrow or maybe the day after discussing the rest of the Canadian budget and my thoughts and commentary. I won't be explaining the basics of the Canadian tax system. If you need a refresher on tax, I made a video on it here. It's one of my most popular videos actually. Going right into it, the Canadian government has proposed on June 25th, 2024, that the new capital gains inclusion rate will be 2/3 instead of 1/2 for any Canadian making above $250,000 in capital gains. So it used to be 50% included in your income, but now it's going to be 66.7% included for any amount you make above $250,000. That change is just for personal tax for individuals. For corporations, the capital gains inclusion rate is now 66.7% for any capital gain starting from $0. So if you know the history of the capital gains rate, it used to be 75% included, then dropped down to 50% in the 90s, and now it's back to 67%, I guess. I want to clear some very important points first. There's some confusion thinking capital gains are taxed at 67%. So if you make 100,000, you'll now get taxed 67,000. That's not what's happening. It's just the inclusion rate. Capital gains are a great form of income because of this inclusion rate. Right now, capital gains are 50% tax-free, completely tax-free. It goes right in your pocket. The remaining gain gets added to your income and then it gets taxed. So you can imagine earning capital gains are a pretty good way to earn income. Look at this image comparing salaried income to capital gains to dividends. Notice how capital gains are exactly 50% of the salary or other income. That's the 50% inclusion rate. Let's play around with some numbers. Right now, if you have a cottage or a vacation home, let's say you're sitting on $350,000 gain. You bought it 20 years ago, now you're selling. Previously, these are just rough numbers, you would have had to pay around $87,500 in tax, which is still a lot of money. Now, under the proposed rules, if they get enacted, you'll pay $95,600. That's a big amount, a big change. You're instantly losing money from just a few weeks ago. This only applies to individuals making over $250,000, which doesn't happen too often unless you sell shares for retirement or you're selling a secondary home. The issue is for corporations, it's for any capital gain, any amount is getting the higher tax now. So it doesn't matter if it's $250,000 or even $50,000. As a corporation, you're already instantly losing money on any capital gains. You're probably thinking, hey, this only affects the rich people. I'm happy. This is a good thing, right? Well, no, the government is being very disingenuous with this stat. They're saying only 0.13% of the population or 40,000 people will be affected. They're right in that fact, but in my opinion, it's 40,000 new people every year. It's not the same 40,000 like the top 1% of wealthy people every year. Think of it this way. You have a nail salon or a barbershop. You've been earning 40,000 every year for 20 years. You built it up and now you want to retire. You decide to sell and guess what? Let's say your gain is $500,000. Or you have a personal corporation, you invested in a cottage or your retirement portfolio and you decide to sell, which means your corporation has capital gains. You're getting hit with this new tax. You're not in the 1%. You're not in this image where it says the average income is 1.4 million. You were at the lower or middle class for 20 years, for 30 years. You sold your business and now you're considered the rich and you get more tax taken away from what you've built over the years. This is huge for retirees or grandparents who want to start selling their assets or give to their children or grandchildren to buy a house. Or even when it comes to the death of a spouse or the death of any taxpayer actually. Upon death, you're assumed to have sold all your assets at the time of death, and then your family gets the remainder or your estate gets the remainder. So you saved up a bunch for retirement, then pass away, you'll have huge capital gains on your final tax return. I know it's dark, but it's actually called your final return. Now your estate will get less. Your family, anyone in your will get less cash, less inheritance because of this tax. Even though you're not part of the 1%, you're not part of the rich, it's your retirement portfolio that you've built over your entire life. So that the stats that the government is saying, it is pretty deceiving. When you think about it, After tax cash is what pays the bills. It's what puts food on the table. What you earn before tax is great, but how much do you have after tax? The knowledge of tax or even just cash flow or tax planning is why I created this channel. Not enough people are informed, it's confusing, and it changes every year, but hopefully I can clarify some points. You know what, I'm not gonna get political or give my opinion in this video. I just wanted to state the facts. I'll save my opinion piece for like a rant maybe in the next video. Stay tuned for my thoughts and commentary if you're interested on the entire Canadian budget. Thanks for watching and tune into the next one.